Good morning, traders. Today we want to discuss trading discussion about the third Elliott wave extension. Yesterday we recorded a video that we titled "The Secrets of a Normal Third Elliott Wave." Alright, the first thing that we want to understand about a normal third Elliott wave is that very often it will end at 161.8% Fibonacci extension of the first wave. Alright, so today we want to go a little bit deeper, alright, talking about an extended third Elliott wave. The first thing that we want to remember is that the third Elliott wave is very often, extended, all right, which means it will go beyond the 161.8% Fibonacci extension of the first wave, all right. But there are more to this that we will talk about today, and how we can trade the extended third Elliott wave. So what we are trying to do, talking about a normal third Elliott wave and the extended third Elliott wave, is to understand how the market behaves. There is a specific pattern that usually takes place in the financial market, and if we can be prepared for it, we can take advantage of it. Though the third Elliott wave can go beyond the 161.8% Fibonacci extension level, there are other Fibonacci key levels that the professionals are watching. The first key level that the professionals are watching, so after the third Elliott wave is beyond the 161.8% Fibonacci extension level, the next level that they are watching 214%, the 214% Fibonacci extension level of the third Elliott wave, all right, 214%. And they are also watching, if the price breaks above the 214% level, they will be watching, all right, the 314% Fibonacci extension level. I need to remind traders that an extended third Elliott wave can go even to 414% Fibonacci extension of the first wave. So you may say to me, Joe, how do I know that it can go beyond that level? All right. So the first thing that you need to understand is that there are some stocks, some financial instruments. I've been talking about this few times before, talking about the characteristic of the financial instrument that we are trading. All right, you need to understand that because, professional traders know that there are some stock, the third wave of those stock will always stop at 161.8% Fibonacci extension level, depending on their business, depending on the product that they are creating, depending on their market share. So there are some stock out there, all right, that very often their third Elliott wave usually will stop at 161.8% Fibonacci extension level. This is a specific character or characteristic of that financial instrument. All right, some stock or some financial instrument, their third Elliott wave, if it is extended, it will go to 261.8% Fibonacci extension level. So you want to look back into the past about that stock, if you are, for instance, on a daily chart or weekly chart or monthly chart, you want to look back in the future, in the past, how far an extended Elliott wave went up or down, all right? So you will notice that some stock, those stock may have their third Elliott wave very often ending, for instance, in a zone of 238.2% Fibonacci extension level. With that information, you can forecast that this stock, as a new third Elliott wave is underway, that there is a high chance that that third Elliott wave will be extended up to 238.2% Fibonacci extension level because of the behavior, so to speak, of that financial instrument over a long period of time. In the past, we noticed that For instance, if you are looking at this stock, you notice that in the past, very often, anytime that we have the third area wave, it can push it to 300%, 314% Fibonacci extension level. If this has been consistent, if you have noticed that that stock very often, always, or that financial instrument, that currency pair, all right, that commodity very often during the third area wave will end at 261.8% Fibonacci extension level. That will help you to have a bit of idea what will happen when the third area wave is extended. So if, for instance, you notice that a financial instrument during the third area wave usually will end at 314% Fibonacci extension level, all right, if it goes above that level, that will be something new. Then you will become a little bit cautious, which means you are prepared to control the risk, because you know that generally this specific financial instrument has never gone beyond the 314% Fibonacci extension level, or that financial instrument over the year had never gone beyond the 261.8% Fibonacci extension level when the third area wave is extended. So the behavior or the characteristic of the financial instrument over the past year will allow us also to have a bit of idea what will happen when the third area wave is extended. It's powerful too, because professionals know it. There are some stocks, they always, as I talked about it before, I don't know exactly the title of that video, all right, I don't remember exactly, but there are some stocks, they move from, they have a cap, so which means there is a highest level that they reach, and anytime they reach that level, professional will sell that stock. So the same thing is happening during the third area wave, though we know that the third area wave, if it's extended, you go beyond it. Once this 1.8% Fibonacci extension level, we need to remember also to check the past, how that financial instrument behaves during an extended third area wave. It's very, very important. Sometimes they may think that, oh, George, I don't need to know what has happened before. You need to know, because that will help you to forecast what is likely to take place. All right? Okay? Another thing we need to know when we are talking about an extended third area wave is that we can have also a bit of idea how the third area wave will be. So by using what? The structure of the first area wave. So we have posted a video about this before, how to forecast the market using the first area wave. You can YouTube search that video at 24 Elliott Wave YouTube channel. We talk about how to forecast the financial market using the first area wave. So the structure of the first area wave can also can help us to forecast the structure of an extended third area wave. All right. So if, for instance, you have the first wave like this, that is a complex first area wave like this, all right, that first area wave is telling us that the real third, so we have first mono wave of the first wave, second mono wave, third mono wave, fourth mono wave, and fifth mono wave. Now the structure of that first area wave here, we can see straight away that the mono wave of the first wave has been extended. Therefore, there is a high chance that when the real third area wave is underway, it's likely to be extended and will go beyond the 161.8% Fibonacci extension level. So we will be waiting. So what we will, you see here on this chart, how the price behave here. See the tail of this candle, the price breaks above the 161.8% Fibonacci extension level and retest it. So for instance, if you are looking at the price structure of a first wave, that is a complex first wave, and we are using the first wave, to forecast, the motive wave, which we usually do, all right, that will help us to have a bit of idea how the third area wave will behave, all right, by paying attention to the structure of the third mono wave of the first wave itself. Check out that video, how to use the first wave to forecast the multi wave or to forecast the financial market by 24 Elliott Wave YouTube channel. All right. So this is another powerful tool that will give us an idea. So if I see, for instance, that the third Elliott wave, if I see, for instance, that the first wave is like this, and I see that okay, the third minor wave of the first wave is extended. Now, as as the third Elliott wave is underway, I know that a normal third Elliott wave is likely to end at 161.8% Fibonacci, okay, extension level of the first wave. Now, because of what I know already, looking at the structure of the first wave, I know that there is a high chance that the third Elliott wave in this case will be extended. We can also measure, okay, the extension of the third minor wave of the first wave in relation to the first minor wave of the first wave. So, for instance, if you notice that the third minor wave of the first wave has been extended to 314% Fibonacci extension level of the first minor wave of the first wave, we can forecast that the real fourth wave can be extended to 314% Fibonacci extension level. The forecast is an expectation. The price does not have to do it exactly that way, but we have a bit of idea that if there will be an extension during the third Elliott wave, it has a high chance to stop at 314% Fibonacci extension level, because the third minor wave of the first wave has ended at 314% Fibonacci extension level of the first minor wave of the first wave. So using the first wave to forecast the multi-wave will help us to determine whether we're going to have an extended third Elliott wave or not, and we can also predict, okay, where that third Elliott wave is likely to end. All right. So first thing first, talking about trading discussion about the third Elliott wave extension. All right. The characteristic of the financial instrument, the behavior of that financial instrument. You will notice that some stocks, some financial instruments will have their third Elliott wave ending at specific Fibonacci extension level. That is a very good information to know the behavior or the characteristic of that financial instrument. As a new third Elliott wave is underway, we will say that this stock never goes beyond 314% Fibonacci extension level during the third Elliott wave. That's a very good information to know, because of what has happened before in the past. Many times there is a high chance that this stock has this specific character, this behavior, and we are likely to see exactly the same thing, and we are prepared for it, but we will not impose that to the market. But because we know it, if it's happening, we will take advantage of it. All right. The next thing, talking about trading discussion about the third Elliott wave extension, we can use the structure of the first Elliott wave to forecast, okay, the real third Elliott wave. So if we see that the third minor wave of the first wave has been extended, we can use Fibonacci extension of the first wave to predict where the real third Elliott wave is likely to end. This is a powerful tool to use the structure, the internal waves of the first wave, the structure of the first wave to forecast the whole multi-wave, including, okay, the real third Elliott wave. All right. The next thing that we talk about today is that the extended third Elliott wave can go up to 214%, 314%, even to 414% Fibonacci extension level. All right. So we are watching those key levels. So here it is. Now this stock we are looking at is a difficult name, Danaher Corporation, Epic DHR, Delta Hotel Romeo. This is an American stock. You can see that it's crossing above the 214% Fibonacci extension. So no more third Elliott wave will stop here. Here we will see that, okay, it has gone beyond it. This is the first wave in this case on the yearly chart. I'm on the yearly chart, so this is the first wave, second wave. So this is, we are now in the third Elliott wave that has been extended. It went beyond the 161.8% Fibonacci extension level. Look how the price behaved here. It breaks over that key 161.8% Fibonacci extension level of the first wave, and then it retested here. Professional took it. You can see that people sold it again here. You can see that the price went down. The tail of this candle is telling that as the price reached the 214% Fibonacci extension level, there were a bit of profit taken before the price bounced up a bit above it. So the next key level that the professional are watching now is 314% Fibonacci extension level. Remember that between the 214 and the 314% Fibonacci extension level, there are other Fibonacci key levels which are 261.8%, 238.2% Fibonacci extension level. But what I want you to remember, just map it out: 161.8%, 214%, 314% Fibonacci extension level and the 414% Fibonacci extension level, that the third area wave can push it all the way to those key levels. But between those key levels, there are other Fibonacci, okay, extension level. All right, it makes sense. Another thing very important, which I'm going to say now, which you will promise me that you will remember, okay, is this, that we can know that a third area wave will be extended. All right, pay attention, will be extended if that third area wave is a minor wave of a bigger cycle. No, you didn't get it. All right. Let me explain it again one more time. If, for instance, so we are now on the yearly chart, and I'm saying to you, this is the first wave, second wave. We are now in the third area wave. Now we can see that this third area wave is extended. All right. Suppose we can see the 10-year chart. All right. If we notice that that's on a 10-year chart, this third area wave that we are seeing on the yearly chart is a minor wave of a bigger cycle. All right. From the beginning of the third area wave, we can expect that, okay, the third area wave will be extended. Now, I leave it to you. I know that a lot of traders that are more experienced will be saying to me, George, move on. I already understand it. You are repeating yourself 100 times. Why are you doing that? When other traders are saying, George, I don't understand. Explain it more. All right, you see the problem now? So, we are now on the yearly chart, and we can see that, okay, so we say first wave for this stock, DHR, all right, first wave on the yearly chart, second wave on the yearly chart. Here we are, we know now on the yearly chart, if you were here in 2009, 2010, suppose you were here in 2010, you see it breaking above the high of this candlestick bar, okay, or somewhere here, now it breaks above it, and you say, all right, it looks like we are now in a third area wave. Definitely in 2012, it became clear that this the high of the first wave is taken out. You say, well, it looks to me that we are now in a third area wave on the yearly chart. All right, but if we go, for instance, you see, I'm going to put two vertical lines because I want to close this video now very fast. So if I put two vertical lines on my chart, here we are. Pay attention to this section, which is the third area wave on the yearly chart. So if, for instance, you were on the monthly chart, or you had another time frame, so you are on the monthly chart, you were here, okay? So you were counting your wave. So on this monthly chart, your first wave, for in this here you say first wave, second wave, third wave, fourth wave, and the fifth wave. So from here all the way up here has been subdivided into 5 minor waves, okay? So this third area wave on the monthly chart is a minor wave of the bigger third area wave on the yearly chart. All right. So if you don't understand it, it means that you need to watch a big video from the beginning. So this is this third area wave is a minor wave of a bigger cycle on the yearly chart. If you see that, you have a high chance to have the third area wave that will be extended, because a bigger cycle is developing. All right. Now on the monthly chart, this is a mini cycle of that bigger cycle. All right. So because a bigger cycle is already underway, all right, there is a high chance the mini cycle also will be extended. Because from here all the way up here, between the two vertical lines, this is the third area wave, which has been subdivided into 5 minor waves. There is a high chance that the third minor wave will be extended. Here it is. Boom, it's extended on the monthly chart. All right. So by checking the bigger cycles, we can have a bit of idea that if the third area wave will be extended. I don't want the video to be too long. I'll leave it to you. So for instance, you want an hourly time frame counting your wave, but you notice that on a daily chart, a bigger cycle is underway, and that bigger cycle, especially if the bigger cycle, all right, remember this, if the third area wave on the lower time frame, so for instance, you are on an hourly time frame, and you see now that, okay, a third area wave is underway. The price breaks above the high of the first wave. And you say, all right, this is the third area wave on the hourly time frame. If, for instance, you go to the daily chart and you see that, in fact, we are in a third area wave, I need to mention it. If you notice that we are now in a third area wave on a daily chart, this is very important, you will expect your third area wave on the hourly time frame to be extended, because very often the third area wave is extended, all right? Because on a daily chart, we are now in a third area wave. If we go to the lower time frame, we see another third area wave. We can expect that third area wave to be extended, because that third area wave is a mini, okay? It's an internal wave of a bigger third area wave. One more time. Children say I repeat myself 100 times. I like to teach, and that's what I'm doing here. So suppose you are on a higher time frame, okay? And you notice that we are now in a third area wave, okay? But you are counting your wave on another lower time frame. If on that lower time frame you see another third area wave that is underway, because on the higher time frame we are in a third area wave, that lower time frame third area wave has a high chance to be extended. That's it. All right, so this is the end of the tutorial talking about trading discussion about the third area wave extension. All right, we need to understand that a normal third area wave will end at 161.8% Fibonacci extension level. Very often, this is not an exact science. But if the third area wave is extended, we want to watch the 214, the 314, and the 414% Fibonacci extension level to help us to have a bit of idea. If the third area wave will be extended, we can check the past, the behavior, the characteristic of the financial instrument that we are trading, checking what has happened in the past during that third area wave. Some stock will have a specific characteristic, which means they will stop at a specific Fibonacci extension level. That will help us to have a bit of idea what is likely to happen today. All right. We can also use the structure of the first wave, okay, to have a bit of idea how far an extended third area wave will go. Sometimes we can even predict with precision, okay, the end of the third area wave using the structure of the first wave. Another thing that is more powerful is to check on a higher time frame. If we are in a third area wave on a higher time frame, and we see that we are now in another third area wave on a lower time frame, the third area wave on the lower time frame has a high chance to be extended, because on a higher time frame we are also in a third area wave that is likely to be extended. One more thing, there won't be any extension, all right, if the fundamentals are weak. So for instance, you see a stock that has been extended over the year, but in the most recent year, their business going down, all right. Will you expect an extension during the third area wave? The fuel, okay, is the fundamentals. So if they are not making money, there won't be any extension. So forget about area wave if you are discounting the fundamentals. They are not making business. The smart investor will not buy the stock. They will not push it up. Same thing in an uptrend, same thing in a downtrend. So very, very important. All right, strong fundamentals are critical during the third area wave. Are they innovating? Are they coming with a unique product? Are they gaining more market share? Do they have competent management in place? Is the market environment bullish? One more thing I need to say to traders: very often, stock or financial instrument during the third area wave will be extended if the market itself is bullish. All right, so from 2009 up to today, we see that the S&P 500 was bullish, the market environment was bullish, so most stock during the third area wave has a high chance to go up. The same thing will not have happened from 2007 to 2008 when the market was bearish. So some stock that are back in the trend, that are going up when the market was going down, even if they are creating excellent product, they will find it a bit difficult, to extend that third area wave, because the general market sentiment, market environment will influence that particular stock. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. We are the TSTW SYS008 traders, talking about trading discussion about the third area wave extension. Happy trading to you all, and speak to you soon.